Hello friends, we'll be discussing another illustration which is again a comprehensive problem for consignment accounts. We'll be understanding what happens when we have to further go ahead and deal with such kind of comprehensive problems. Now when we speak about comprehensive problem, this will be a last comprehensive problem for this chapter, which will make you understand that when it comes to mentioning the accounts, or rather creating accounts for both the consignors and the consignee without the journal entries, how they're supposed to be prepared and how the journal entries will have an effect on these consignment accounts, or rather these ledger balances accounts that we'll be preparing further. So let's start with the illustration and then we can go ahead with the number of calculations that we'll be doing for both these consignment accounts, rather consignor and consignee accounts as well. So let's start with one. So the illustration has been mentioned here down for your reference. Let's start with reading it. Rather, what has been understood can be mentioned down in the question here itself. Now let's go ahead and see what exactly has been mentioned in this illustration for your reference. So the parties to the contract or the consignment are Swastik Oil Mills and Das Brothers. Swastik Oil Mills from Mumbai being the consignor and Das Brothers being the consignee here. So on 1st of Jan 2012, Swastik Oil Mills from Mumbai directed or either consigned 5,000 kilos of castor oil to Das Brothers, and this was on 1st of Jan 2012. Make sure the dates are mentioned down here. Cost of that castor oil was 460 rupees per kilo. That means 5,000 multiplied by 460 will give you the exact price of the consignment that has been sent to the consignee. Swastik Oil Mills also paid around 2 lakh rupees for the packing, freight and insurance of the consignment. During the transit, it was also mentioned that 125 kilos were accidentally lost, for which the insurance upfrontly paid up rupees 45,000 as in full settlement to the consignor, that is Swastik Oil Mills. On 10th of Jan 2012, Das Brothers took the delivery of the consignment, which was sent on 1st of Jan 2012. Now on 31st of March 2012, Das Brothers reported that 3,750 kilo of castor oil was sold out at 600 per kg. Das Brothers also incurred certain expenses like go down rent or probably salesman's salary, etc. like this. It has been mentioned down here. Let's read it out. Go down rent for rupees 30,000 was incurred by the consignee. Advertisement for rupees 40,000 was also incurred by Das brother, who is the consignee here. And salesman's salary of 64,000 was provided by the consignee as well. Now let's come on to the commission part, where Das brother is entitled for a 3% commission plus and in addition to 1.5% del credit commission over and above the commission, that is 1.5%. Now out of that, a party who got 500 kilos from Das brothers was able to provide only 80% of the amount. That means rest 20% is completely bad debts, and hence that will be borne by the consignee and not the consignor, because there is a del credit commission in the question here. Now Das also reported a loss of 50 kilos which was due to leakage. Now it is assumed that whatever balance has been left has been paid off via bank draft. So we have to prepare the books of accounts, or rather all the accounts in the books of both the parties, and then figure out what is the standing of profit and loss in both of their accounts. So let's start with the working note and understand how to go ahead with the calculation and preparation of these accounts. So the first calculation that we'll be doing is calculation of abnormal loss. So to calculate the calculation of abnormal loss, you have to first figure out what is the cost of the consignment that has been sent out. That means the total cost of 5 1000 kilos plus the freight and other charge, that will give you per kilo cost later on, and that cost can be then added to the abnormal quantity. So let's start with the cost of all 5000 kilos sent out. So if you can see, the total cost of 5000 kilos has been calculated. That means the first consignment that you have to see is 5000 into 460, that will give you 23 lakhs total. And the other packing freight expense that has been incurred by the consigner, that has to be added, that will give you a total of 25 lakhs. Now this is the total of 5000 kilo. On this basis itself, you will further go ahead and evaluate the calculation of abnormal loss now. Now the abnormal loss quantity is 125 kilos basically. So if you have to actually figure out how much is per kilo, that means 25 lakh will be divided by 5000 and multiplied by 125. That will give you the exact cost of 125 kilos. So the abnormal loss amount has been figured out, which includes the cost of the amount, or rather the cost of the quantity, as well as the traveling or freight expense has been included in it. Now, if 62,500 is the cost of abnormal loss, now the total 25 lakhs, if you subtract this much amount, then you will figure out what is the balance, or what is the cost of the balance amount or balance quantity, because 125 is supposed to be subtracted from 5000, and that will be the exact cost of that many items. So the balance cost is 2,437,500, which is for a quantity of 5000 minus 125. So for 24 lakh 37,500, the quantity that is corresponding to it is 4875 kgs, because the balance 125 is an abnormal loss. So that will give you per kg cost for that much of quantity. Now with this, we have completed the abnormal loss calculation. Let's understand how much is the closing stock that we have to take into consideration. Now, we have to understand that out of 5000, not complete 5000 reached Kolkata. Balance, or rather some of it, was an abnormal loss, and after that also there was some loss which was known as normal loss, because 50 kilos was just lost out due to leakage. So balance will be the amount that is available for selling out, and out of that how much has been sold out will be subtracted, and the balance that will be left is the closing stock that you have to calculate on. Now let's figure out how much exactly reached Kolkata. Now as you can see, the sent quantity was 5000 kgs, out of which abnormal loss was 125 kilos. So the actual delivery that happened is 4875 kgs itself. Now, out of this 4875, there were another 50 kilos that were lost due to leakage. So the actual quantity that was available for leakage, or rather we can talk about sale here, is 4825 kilos, because out of 4875 kilo, completely 50 kilo was completely taken off due to leakage, so we cannot consider that. but it has to be considered while taking the costing part. So 24,37,500 still remains the same. The only difference is that this will be now for 48,000, or we can say 4,825 kilo, and not 4,875 kilo anymore. So as highlighted in green here, the total amount of cost that is available for the quantity is 4,825 kilo, which is 24,37,500. This is the cost now. Accordingly, we have to find out the closing stock valuation. So let's go ahead and figure that out. So the actual sale that happened is for 3,750 kilos. So out of 4,825, if 3,750 is sold out, whatever balance is left is your closing stock then. So the cost of 1075 kilo of closing stock will be calculated very easily, because if 24 lakh 37,500 is the cost of 4,825 kilo, how much would be the cost of 1075 is what we have to calculate. So that will be total of 5,43,070, which is rounded off. Now this is the value of the closing stock, which is 1075 kilos. So with this, we have completed the calculation of closing stock itself. The next that will be going is the preparation of consignment accounts. Now that we have already calculated the working note for valuation of closing stock and the abnormal loss itself, the next part that we'll be doing is preparation of consignment accounts, or rather other accounts in the books of the consigner, and then the next part will be in the books of the consignee. Now the first thing that we'll be preparing is in the books of the Swastik Mills, who is the consigner, and the consignment account will be prepared there. So we'll be preparing with the consignment account first. Let's start according to the journal entries, and then we'll move ahead to the other account preparation in Swastik Mill company itself. So the first entry that we have passed is for rupees 23 lakh. That means the cost of the 5,000 kilos of castor oil that was sent out to Das Brothers of Kolkata. The next one that will be passing through is the amount of expenses bear or incurred by the consigner. The amount has been mentioned down here as rupees 2 lakhs itself. Let's go ahead with the next entries. The next one we have mentioned is the abnormal loss. This has been also cleared here, which has been calculated earlier in the working note. After this, we'll be mentioning the closing stock value and then the sales value together. Closing stock valuation has been mentioned. Now it is better so that you go ahead and write down all the entries or all the calculations that you have done, so that it creates less confusion for you as to which entry is supposed to be posted and which is not yet. Now the next entry that we have posted here is sales. That is for 3750 kilos being sent out at 600 per kilo. That has been mentioned down there. Now additionally, on this basis we have to calculate the commission here. So let's mention the commission entry, which will include the expenses beared by the consignee as well. Now we have mentioned the total of expenses here. Let's read it out. Go down rent 30,000 has been mentioned here on the debit side. Advertisement has been mentioned 40,000. Salesman salary for 64,000. Now the ordinary commission is 3% on 22 lakh 50,000, that is the sale value, which is 67,500. After which del credit commission is 1.5% of whatever commission that we have earned in ordinary. That means half of the ordinary commission. If 3% is complete, 1.5 or 1.5 is half of that ordinary commission. So 67,500 what you have earned as commission of ordinary, divided by 2, that will give you the amount of del credit commission. that is 33,750. So this total will compromise the total of all the expenses that has been paid for the consignee here. The same has been highlighted in green here. Now let's go to the other transactions. Now, once all these things have been prepared, we understand the consignment account is completed. We just have to figure out whether there is a profit or loss. So let's prepare the interim balance. Interim balance means the total of debit side and total of credit side, and see what exactly, or rather which side is bigger as compared to the other one. If debit side is greater as compared to the credit, or credit side is greater as compared to the debit, is what we'll be checking via interim balance. So the credit side total comes as 28 lakh 55570, that is 28 lakh 55,570. Let's figure out what is the total of the debit side now. The debit side total is 27 lakh 35,250. Now if you see, the credit side is more as compared to the credit side, hence there is a profit here that will be checking out how much it is. So the profit here is 1,20,320, and this gives you the total of consignment account, which is 28,55,570. Now let's prepare some other accounts in the books of consignor itself. It may be the consignee account, abnormal loss account, etc. Let's see what exactly do we have. The next one that we'll be preparing is the consignee's account here. So let's start with the consignee account now. So the first entry that we'll be passing is to the consignment account, which is 22,50,000. The next entry that we have passed on the credit side of this specific consignee account is the total of expenses that he has bared. And next one that will be passing is the commission entry. So this is the closure of consignee account now. Now here we'll be balancing. That means you can clearly see debit side is more as compared to the credit side. So the balance in the credit side will be the total, or rather we can say that will be the balancing figure. So the balancing figure here will be 2014,750, that is settled by the bank draft as mentioned in the question. Now this marks the closure of all the accounts that we had to create in the books of consignor. Now let's prepare similar accounts in the books of the consignee. Now the one that we are preparing right now is in the books of the consignee consignor's account. Not the consignment account, is the consignor's account. So accordingly we have to pass on the sales entry, or rather any entry related to it. So whatever consignor's account that we are preparing here, if there is a sale, then it is on the credit side. If there is an expense, then it is on the debit side. So the total of credit side, rather we can say on the credit side we have 22,50,000, which is the sale amount, and on the debit side we have mentioned the expenses which are related to the consignee. The next part that we'll be mentioning is the commission account. So now that this is prepared, the balancing figure for here will be on the debit side, because credit side total is anyway higher as compared to the debit side. Hence, the balancing figure will be the balancing bank figure. So the balancing figure is again similar as compared to the consignee account that we have prepared in the consignor's book of accounts. The only difference is that whatever balancing figure you used to see on the credit side in consignor's account, rather in the consignor's book, it is shown on the debit side here. It is a reflect entry or reverse entry that we have passed. Hence it is like this. Now there are next three accounts that we will be preparing regarding the commission account. So let's prepare that. So the next account that we'll be preparing is the commission account. There will be only one single entry that will be passed in here. So on the credit side, we have mentioned by Swastik Mill account, that is 67,500. This is only the ordinary commission. The next account that we'll be preparing is the Del Trader commission. So this is a self-balancing ledger. Again, this will amount, or rather the debit balance will be transferred to profit and loss account, as this is a profit for the consignee. Now let's prepare the Del Trader commission account, which will also have similar effects. So if you see, it's the same transaction, or rather the same amount that we have mentioned here, and the same effect has been given. The last account that we are going to prepare is the bad debt consignment account. So to give an example, there was a statement that was mentioned in the question: a party who took 500 kilos of the oil could pay only 80% of the amount. The sale price was 600 rupees. So 500 into 6 gives you a total of 3 lakh rupees. Now, out of this 3 lakh, only 80% could be recovered. That means 2 lakh 40%, or rather 2 lakh 40,000 could be recovered here. So the bad debt here is 60,000 rupees, which couldn't be recovered at all. So that will be an expense for the consignee, because there is a Del Credit commission. It will be on the debit side of this consignee's account and will be mentioned here. So similarly, we have noted the calculation also. Sale value was 3 lakh, out of which 80% could be recovered, that is 2 lakh 40,000. And 60,000, that is the balance. Bad debts couldn't be recovered, hence it has been mentioned in the outer column. Now this will be transferred to the profit and loss account. So accordingly, it has been mentioned here. So this marks the closure of this specific illustration. I hope this specific illustration gave you the details of how a comprehensive problem when it comes to both consignor and consignee can be resolved, with effective calculation being done on this. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.